Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure to recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Chingy Goodnight TV, week 32, February 3rd. I'm Huang Peng Ray. I wonder if everyone is excited because in just 15 minutes, the ADP data will be released. So in a bit, we'll start talking as usual, and then in about 4 or 5 minutes, we'll pause to check out the data together. Whenever a data release happens, there are corresponding changes in asset prices. We'll continue with the rest of the content. Right now, everyone seems to care a lot about the labor market, so even though this is a private sector report, it's still relatively important. All right, let's take a look. Today, we'll mainly talk about Amazon's AI strategy because Amazon released a lot of news yesterday. So we'll discuss the current situation, what impact it has, and then talk about what's coming next. That is, the earnings reports for Marvell and Pure Storage. Right now, before the market opens, Marvell is up while Pure Storage is down. However, in the long run, Marvell's outlook is relatively less optimistic. As for storage, the situation is relatively better. We can look at more indicators or other aspects, and we'll see why that is in a moment. So for this week, there will be quite a bit of data released today, including the ADP ISN Services Index and September's industrial production. First, let's take a look at the ADP forecast. Previously, the consensus was 42,000, but the current expectation is only 10,000. So it looks like the forecast is much lower now. Once the data is released, let's take a look at it together. So right now, if this 10,000 matches expectations, if the actual number is in line with the forecast, then it could signal that the market is gradually heading toward weakness. At this point, everyone pretty much knows that the Fed is likely to cut rates, but what will actually happen after the rate cut? We'll take a closer look at that a bit later today. Some different scenarios going forward. All right, so another data release at 4:15 is the New York industrial production and capacity utilization. At this point, since this data has already been delayed by 2 months, it doesn't carry much significance. Plus, if you look at the past few months, it's mostly been fluctuating. So as long as it meets expectations, or even if it's a bit worse than expected, it probably won't have much of an impact. Now, what's more important is the November Services Index, the ISM Services Index. This actually has a bigger impact because the main industries in the US are all in the service sector. Right now, the expectation is still above 50, so the key is whether it can stay above 50. Basically, as long as it doesn't drop below 50, prices have come down a bit, and as for the rest, as for new orders and employment, there aren't any forecasts, so we'll just have to see how the actual data compares to previous periods. This will be released at 11 o'clock. If you look at the US dollar index, it's still in a downward trend for now. This short-term weakening trend probably won't change. As for US interest rates, you can see that after following the rise in Japanese yen and Japanese government bond yields a few days ago, interest rates are now showing a rebound. What we should note is that currently, on the short end, the decline in rates has been quite significant, while on the long end, the drop hasn't been as large. So looking at it now, it seems that right now, the market has already anticipated that the next Fed chair will implement significant rate cuts. However, the underlying issues still haven't been fundamentally resolved, and there are still many things that need to be addressed going forward. So at this point, it looks like the yield curve will become steeper, meaning short-term rates will drop, but the decline in long-term rates may not be as pronounced. You can see that this is already happening in the current situation. For example, the 2-year yield has actually dropped quite noticeably, but for the 10-year, the decline is much smaller, and for the 30-year, there's almost no change at all. This shows that at present, the difference between short and long-term interest rates is mainly reflected in the short-term rates coming there. All right, let's take a look at the index. Right now, the index is actually fluctuating within a range without any clear direction. Everyone is still waiting for more news to come out, which is consistent with what we mentioned before. So let's quickly review the recent developments. You could say that right now, the main growth is happening in the semiconductor sector, which is seeing significant gains. This is mainly driven by various semiconductor centers. Looking ahead, it seems that Stocks related to equipment and those in the upstream semiconductor sector should have even more momentum going forward. A few days ago, we heard that recently, over the past few weeks, some of the more popular stocks have been industrial stocks related to Google, which have had some news driving them. While the upward movement may not be very obvious, what's really happening is that tech stocks are rotating. One sector rises after another. For now, the capital hasn't left the market. Instead, it's rotating and waiting for opportunities to drive up different sectors in turn. As for the Russell 2000, it's still in a relatively normal state at the moment, right? First, looking at global developments, the British Prime Minister is expected to visit China from January 29th to 31st next year. As for this, currently the UK's Labour Party is... Yes, that's right. China's position is relatively close because they want to balance trade as well as defense and diplomatic relations. Currently, opposition parties in the UK, such as the Reform UK Party or the Conservative Party, are relatively less hardline. So right now, actually, besides trade between the two countries, there is actually another issue, which is that currently China wants to build the largest embassy in all of Europe in the UK. The location is excellent, and this embassy, the decision has already been postponed many times. The latest delay is that the announcement, originally set for December 10th, has been moved to January 20th. So the UK is actually quite hesitant about this matter. I've also been to this embassy site. It's very close to a lot of important power facilities and data centers. Right now, there are actually concerns that this could potentially... There are some national security concerns, so we'll have to wait and see. At the moment, you can actually see that interactions between Europe and China are starting to increase. Many heads of state are planning visits to China. For example, Macron is currently in China, and the German Chancellor is also expected to visit China next year. So going forward, we can observe how each European country handles its relationship with China. We can also see the current disputes between China and Japan, and it appears that Japan is actively pushing things forward. In terms of economic and trade strength, China still has considerable influence. So we'll keep an eye on that. Additionally, Macron from France is starting his 3-day visit to China today. The main focus is actually the economic and trade relationship between China and the EU, so we can watch how things develop going forward. Will China relax some of its bans on French products and increase imports from France? That's the current situation. Next, regarding Belgium, it has vetoed the EU's proposal to use frozen Russian assets to provide loans to Ukraine. Right now, Ukraine is short on funds and is looking everywhere for money. Besides turning to the US and continuing to seek solutions, Ukraine is also looking to Europe. As for Europe, actually, they're holding on to a large sum of Russian money, but this money actually can't be touched because once it's used, it would set a new precedent in finance. A collapse would mean that if money from countries seized by the EU could be used at will like this, it would seriously undermine confidence in the financial system. Moreover, Russia might take legal action against Belgium, the country currently holding these assets in trust. As for Belgium, they really don't want this to happen because they believe that the decision to use the funds might be made by all of Europe, but the consequences would fall on Belgium alone, on just one country. So right now, Belgium has repeatedly vetoed this proposal. So at the moment, these frozen Russian assets are still being held within Belgium. Now, let's take a look at what the US government is doing. At present, there's still a year to go before the 2024 midterm elections. As for the Republican Party, they suffered some clear defeats in a few elections held earlier this November. But in the past few days, there was a congressional election in Tennessee. Of course, the Republican candidate won, but Tennessee has always been a Republican stronghold. Just a year ago, Trump also won here by a landslide. Last time, the margin over the opponent was 22%, but this time in the House election, they only won by 9%. You can see that in this election, the Republican Party actually mobilized a lot of manpower and resources to support the campaign and make sure their candidate could win. This candidate was already leading in the polls, and with the help of the Republican Party, they went so far as to have even the Speaker of the House, Johnson, personally come down to participate in campaign events. As for Trump, he also got involved by posting online. "I absolutely have to go vote." So that's the extent they went to. Only then did the Republican Party show up. You can see that right now. There is actually a certain level of dissatisfaction among the American public toward Trump or his administration. So what exactly did the Republican leaders do to make this possible? But what really helped close the gap with the Republican Party, actually, it comes down to one thing: the cost of living. This was also something that New York City Mayor Adams focused on during his campaign, which is why he was able to gain so much support. So right now, the cost of living is a major issue. It's a very urgent topic. Housing, student loans, and so on are all part of it. This is quite a significant financial challenge. So right now, this is actually a major issue in U.S. domestic affairs that needs to be addressed. And at present, there really isn't an effective solution for it yet. All right, let's take a look at the U.S. market trends. Today, there's an interesting piece of news about Wells Fargo. They've started covering Oracle and have set a pretty high target price, about 40% above the current level. You can take a look. If you multiply Oracle's current closing price by 1.4, that's roughly the target price they're projecting. So regarding Wells Fargo's recommended price, they're projecting that by 2029, the price, or rather Oracle's market share, could reach 15%. Up from 5% in 2025, so that's actually quite significant. Oracle share is expected to increase like this, which is anticipated because they've invested so much and spent so much capital, so of course there should be some results. Now, the main topic is that people aren't really focusing on whether Oracle can actually achieve this. The key point is whether their revenue, expenses, and cash flow can really support it. This is actually the issue that people are most concerned about right now. At the moment, this concern hasn't been clearly resolved, so if Oracle does rebound, right now it's showing a slight rebound in pre-market trading. So now we just have to see whether it can really deliver. With more events or news coming out in the future, and as people's confidence in the stock changes, for now, Oracle probably won't see any major issues, because at the moment, there are signs of bottom fishing and buying on rebounds at key moving averages. So right now, there are still people betting on Oracle. As for the stock, its valuation or the market's perception of it could be reversed in the future. Now, regarding Oracle, right now, people are bullish on it, thinking that not only will it naturally rise, but also that in the future, it might be able to prove that it can handle more and more workloads. Its AI infrastructure capabilities could potentially rival those of leading companies like Amazon and Microsoft, putting it in direct competition with them in the market. The gap between them will quickly narrow, so this is a relatively optimistic view of Oracle. But on the other hand, OpenAI has issued a red alert, focusing its resources on accelerating improvements to ChatGPT. Originally, OpenAI had many business lines, including shopping AI agents, advertising, and so on. But now what they're doing is all resources are being concentrated to see if they can quickly update the ChatGPT model. Because right now, with Google and Amazon both launching new models, they're facing significant pressure. So going forward, it depends on whether ChatGPT can catch up with the pace of Gemini and Amazon. All right, so here you can see Oracle's stock price chart. Actually, at this point, you can see some signs of stabilization below the yearly moving average. So now it's a matter of whether it can hold at the current level. Next, looking at other developments, as for Anthropic, it's currently in a It was mentioned at the meeting that, as of now, the $10 billion investment agreement with OpenAI has not yet been finalized. Actually, it seems that previously, the market was also relatively, there have been some discussions about this circular transaction, but at the moment, it seems that nothing has been finalized yet. So confirmation of this will probably have to wait until the next stage. And even when that will happen is still uncertain. So we'll just have to keep watching. Why hasn't it been finalized yet? Are there any concerns? We'll have to see if any further news comes out to support this point. As for what's next, currently Bloomberg mentioned that the current options trading shows that a market bottom is starting to form. However, investors are still not in a hurry to increase their holdings. Right now, there is downside protection in options. The volume of transactions for 1/10 strike options has dropped to single digits, which means that at present, actually, after the sharp rebound and steep decline in November, many individual stocks are now clearly showing signs of a bottom. There are signs of bottom consolidation, and there is hope for a further upward move starting in December. So right now is actually a relatively good time to position yourself. You can take a look at the stocks you hold or your watch list and review them one by one. So recently, you can take advantage of the timing and then start making some moves to position yourself. All right, moving on, there's an interesting piece of news. Right now, West Fargo compiled some information mentioning that the ChatGPT camp, taking NVIDIA and Microsoft as examples, since Microsoft has been deeply tied to OpenAI. As for Gemini, the main players are Google and Broken. Of course, they mentioned that right now it's basically these two stocks going up against the other two stocks, with Microsoft. Reportedly, their stock price has been relatively weak. It's the first time since 2016 that they've fallen behind Google and Tongue in performance. So this topic is really about the current reversal in market sentiment. Overall, it actually won't have too much of an impact on the big players because their businesses are still very solid and their cash flow is strong. As for future applications, they won't be lacking in revenue either. So at the moment, it's really just capital rotating around. Going forward, some of these big companies will still have room to grow. Let me take a look at the ADP data first. The latest ADP number is pretty bad. It's minus 32,000. But the previous figure was revised up to 47,000. Right now, there aren't any more detailed breakdowns yet. Let's quickly check the stock index situation. At the moment, this is the S&P 500 options, and they're currently down, but the drop isn't that big yet. But that one is also down, and although it's dropping, it's still moving along the seasonal trend line. However, there has been a more noticeable decline just now. The US dollar has also clearly fallen. As for US Treasury yields, they've dropped as well. This is the 2-year and this is the 10-year. So right now, it looks like the stock index, the US dollar, and US Treasury yields are all heading downward. So the ADP data was released first. It was over 32,000. All right, let's continue with our content. Okay. As for what's next, it looks like the ADP numbers aren't strong either, and this has been a concern for a while. Regarding inflation, as we mentioned before, it seems to be a one-off event, so it looks like the Fed will go ahead and cut rates. So what could happen in this situation? It's very likely that there will be a rate cut due to inflation still remaining high. Well, the Fed is facing a tough challenge because its two main goals are actually in conflict. But for now, it seems like this is inevitable. So even though the move is meant to anchor inflation expectations, it's still very likely that they will make some sort of statement about the factors involved. In the short term, this could put some pressure on the stock market. But looking ahead, the outlook for 2020 still seems positive. With continued stimulus and a loose policy environment, a rebound is likely. So going forward, things actually look promising. So before December 10th, it's likely that December will be a relatively bullish period for the stock market, and then after that, there might be a period of decline. Once the market sentiment stabilizes, we could see another rebound. That's the current situation. All right, next, let's talk about Amazon's AI strategy. So as for Amazon, yesterday they also launched their own chip, the Trainium 3. They really emphasized its efficiency, saying it's even better than NVIDIA's. However, Amazon's chip lacks a robust software library, whereas we know that NVIDIA's. The reason NVIDIA's chips are so good is because they have a strong moat, which is their ecosystem. They have a lot of applications, so if you want to develop things like robots or self-driving cars, you can get started quickly. There's no need for any extra preparation. Everything can run directly on their chips. Currently, the main customers for Amazon's chips are companies like Entropy. Entropy is a company invested in by Amazon itself, so actually, aside from Entropy, there aren't any major customers. As for Amazon itself, There were even rumors a while back that they were going to use Google's TPU and then use their own stuff. So looking at it now, it's still unclear how many customers or how much adoption there really is for this series of training chips. The scope is actually unknown, and the outlook isn't all that optimistic. The visibility is pretty low. On another note, the flagship network has launched various AI models. That includes the Nova series and so on, hoping to leverage their own CPUs to grab more market share. One thing that's particularly notable is the Nova Forge. What this does is allow companies to import their data into these models during the pre-training phase so they can generate models tailored to the output of those companies. Instead of using a standard model, it allows for fine-tuning based on the specific needs of each company, which is currently a major difference. At the same time, Amazon also mentioned that its next generation chip, the T4, will support NVLink Fusion and MGX rack, aiming for deeper integration with NVIDIA's chips. So what the company will do is open up some of its software to run on AWS. This is actually a two-way, deeper level of integration between both parties. First of all, they mentioned that the standards haven't been fully established yet, so that's actually a challenge going forward. As for Amazon's products, their offerings are relatively comprehensive, and this update is really meant to show everyone that. It takes a lot of time and, frankly, a lot of money to take on this challenge, but the major tech companies are still working hard to break free from their dependence on NVIDIA. As for now, it's unclear whether Amazon's approach will succeed, especially compared to Google, which has already made significant progress. As for Amazon, we'll have to see whether their chip can actually be adopted by many companies in the future. The key is whether their project can gain traction and if its GB value can really increase. On the software side, they actually have a variety of different models as well. So going forward, it's a question of whether Amazon's approach can really succeed. Looking at the overall market, the main function here is really to provide companies or customers with more options. If you don't like OpenAI or you don't like Google, you still have Amazon as a choice. And now there are just more and more options available on the market. But this kind of thing will squeeze profit margins. So as we just saw in the US, it looks like companies are competing against each other, and even internally, there's a culture of competition. This will lower profits and reduce the room for making money. Looking ahead, it actually seems like things will become more similar to China, where AI computing power or models will become more like commodities. And when something becomes a commodity, it's all about cost effectiveness. Whichever product offers better value for money, that's the one people will use. That's what it comes down to. So right now for Huawei, this isn't really a challenge for them. This thing, well, at the moment, Amazon and Huawei can actually be used together. In the future, it'll just depend on which provider the customers want to use more. That's something to be decided later. But for now, actually, it's that Amazon, in order to expand its ecosystem, is adopting Huawei's technology first. So according to Benzinga, it looks like Amazon is currently taking a two-pronged approach when it comes to AI. One is that Amazon previously partnered with OpenAI, and OpenAI uses this, then purchases Amazon software services. So Amazon is able to make money from software through OpenAI. And Amazon, at the same time, it also sells chips to Anthropic, making money from selling those chips. So it looks like Amazon is participating in the AI competition in different ways. One is through its AWS. Another way is by using its own chips. These two are distributed across different business models, so they see this as Amazon's two-pronged strategy. No matter what, it seems that Amazon, because of this advantage, having both approaches, has a higher chance of winning. As for the future, you can also see that the T-Series models, well, their adoption rate is expected to gradually rise because the cost of these machines is already quite low. At the same time, if it can truly deliver on its cost effectiveness and value for money, and if it can be launched on schedule with the images as promised, then it does have a certain potential for adoption. It just depends on whether there'll be more news about customers adopting this product in the future. So what kind of impact will Amazon's big AI model have going forward? Well, as we can see, actually, now that Google's camp has started to emerge, the stock price outlook for the future has started to come under pressure. And currently, the expectation is that the stock price will continue to face pressure. So it means that this company might continue to maintain its dominant position in the market as well as its profitability. But in the future, it's very likely that this company will become just one among several instead of the only one. In other words, it used to be irreplaceable. Everyone had to get their goods from them. Or maybe their performance is still the best, but going forward, it's possible that many companies will have similar offerings, and while this company will still be relatively outstanding, it's now about being relatively better, not absolutely. In the past, it was absolute, but now it looks like this relative situation is gradually opening up. And that's the main impact going forward. Actually, at the moment, overall in this area, in terms of self-development, or when it comes to the processor segment, we're now starting to see clear signs of intense competition. So going forward, it's very likely that investment funds will start to move away from here and look for other opportunities. For example, like we mentioned, AI infrastructure, or possibly the upstream side of semiconductors, these are likely to be the areas where capital will flow in. But the key challenges going forward are the improvements in cost efficiency of the T-Series chips, as well as OpenAI's profitability. Because, well, Amazon has a strategy that bets on OpenAI, so whether OpenAI can succeed is crucial. In fact, OpenAI's profitability is really important. It's not just important for Amazon, but also for companies like Oracle and many others. Because right now, AI is a crucial part of the ecosystem, and if it can really take off, then the whole AI narrative holds up. But if it can't keep going or doesn't succeed, a large number of AI companies could collapse because of OpenAI's downfall. Thirdly, regarding AWS's revenue, at present there are no signs or disclosures about where it's coming from. Then, moving forward, we can see whether a lot of AWS's revenue actually comes from OpenAI and Anthropic. So what if most of it really does come from OpenAI and Anthropic? That would raise some concerns about inflated numbers. What we hope to see is that OpenAI's actual revenue is not only growing rapidly, but also comes from a diverse range of sources, reaching far and wide, and not just concentrated in a handful of companies. But the current situation is actually pretty good. Today, we're also going to talk about Marvell. In fact, our timing is quite good because Marvell's biggest natural interface customer is Amazon. So we're also looking at it from another angle, Marvell's performance, and at the same time, we'll see how things are going. Their views on their own core business are actually quite consistent. For example, Amazon's strategic outlook for resource chips in the coming years is positive. But as of now, Marvell hasn't really seen any significant gains throughout the year. And their stock price has also been relatively weak, so we'll have to see what happens next. Whether Amazon can restore investor confidence remains to be seen. It's actually not that easy to predict the situation, because if MyTP has already decided to purchase TPP, and the issue is that they want you to make their TC chips, then it depends on whether they can really pull it off. In the end, it might just turn out that, like other companies, they can only continue to use chips from Google and Nvidia. Looking at Nvidia's stock price, it's still under pressure at the moment, and we expect this weakness to continue for some time. However, it's still one of the main beneficiaries we've mentioned. You can see that there's buying interest at key moving averages right now. Going forward, the main beneficiary companies will still be discussed, but investment capital and momentum may gradually move away from this company. Now let's talk about Marvell's earnings report. So far, the report is actually pretty good and has met market expectations. The main contribution still comes from data centers, which of course also drove revenue growth. As for other important markets, like enterprise networking, their inventory is in the process of normalizing. During the operating period, revenue in the market also grew, but it's still much smaller in scale compared to the data center segment. This time, another key point for Marvell is that they acquired Celestial AI. This company is mainly focused on next-generation scalable interconnects, and they're using it to develop a photonic fabric platform. Because, as we all know, currently, optical transmission is actually starting to replace electrical transmission as a faster channel for data exchange within data centers. This AI technology can interact with different processors, allowing for chip edge connectivity to be preserved. You can use it for other purposes as well, such as boosting your memory computing power, liquid connections, and so on. So this topic is There will be more advantages in the company's connectivity solutions, so by acquiring Celestial AI, it's expected that Mavic's competitiveness in both scale up and scale out will increase. In addition, Celestial AI's technology can also be used in multiple areas. Processors, allowing them to share a large memory. In other words, I bundle these processors together and connect them to a very large memory unit. Because I can use a common interface, my data transfer becomes very fast. That's one aspect. Another is that it can replace electrical connections in multi-chip packaging. So that's the current situation. Yes, Marvell is quite optimistic about this selective AI, and it's expected that this product will only start contributing to revenue in 2028. At first, it will be about $500 million, and later it will reach $1 billion. But compared to Marvell's current revenue level, that's just a drop in the bucket, though it's still something. From a technical perspective, this allows for more organization and optimization in both scaling up and scaling out. The company believes that the scale-up market could reach $6 billion by 2030, and optical interconnects could reach $10 billion. So yes, the scale is indeed huge, but how much market share can your company actually capture? This is actually a challenge that Marvell is about to face, because for Marvell, it has always been in a relatively weak position. In this field, Broadcom is still the biggest player. In terms of performance, scale, and product portfolio, Broadcom is far superior to Marvell. So at present, Marvell is still in a relatively disadvantaged situation. Next, let's talk about Marvell's data center business. In this sector, its main growth comes from connectivity. And actually, connectivity is a pretty solid business for them. It's also where they perform the best. This business has never really had any issues, and it's expected that in the next fiscal year, its revenue will see double-digit growth. As for their own chips, this segment accounts for a quarter of the total, and it's expected to grow by at least 28 times. The main customer for these custom chips is actually Amazon. You can also see that Marvell mentioned that the self-developed business is mainly driven by major customers transitioning to the next generation of SPUs. This is very likely referring to Amazon, which is moving from T1 and T2, then to T3, and will later launch T4. At present, it already seems like this is the case. This has triggered all the transition orders from this major customer to the next generation of chips. But overall, this is relatively positive, meaning the customer is actively pulling in goods. The last quarter's share comes from the storage business, and for this part, year-over-year growth will be at least in the double digits. That indicates strong demand for special offer switch products. Overall, Marvell's home business has always performed well, but it's just that its transportation segment includes many parts like storage, connectivity, and semiconductors. Previously, the semiconductor segment wasn't doing very well, which dragged down its overall performance. So, in other words, this business segment actually had a negative factor. If you compare it to traditional businesses, that's the difference. If you look at companies that focus entirely on connectivity or entirely on storage, Marvell is at a disadvantage in this area. So that's the current situation. As for the outlook, you can see that Marvell's relatively optimistic about its own chip business. So in other words, it's possible that this connectivity business could return to a more balanced state, meaning both connectivity, in-house R&D, and storage could all develop in a balanced way. That would be good for the company. Looking ahead, the in-house R&D will be brought back, as previously mentioned, including multi-chip packaging and the SPU, which is the processor's logic layer, as well as these additional devices. So, in other words, this. It can handle these tasks by offloading certain specific functions from the processor, allowing the processor's operational resources to be concentrated and focused on the AS0 tasks it needs to perform. This is the current state of development, and overall, people remain relatively optimistic about the future outlook. He said that the current demand from customers is quite strong, and customers will also provide forecasts for the next 1.5 to 2 years. This future roadmap will help us plan our production capacity. It is expected that, if all goes well, revenue for fiscal year 2027 will see an annual increase of over 25%. As for other markets, revenue growth will occur in other markets. By 2028 fiscal year, its manufacturing center's revenue could exceed $2.5 billion, with even greater year-over-year growth. Notably, smart chips could double second phase industry revenue. By 2029 fiscal year, this center's revenue could exceed $2 billion USD, up from $1.5 billion USD currently. The company itself is currently quite optimistic, but you can see that its stock price performance is actually just so-so. The pre-market surge was also just a short squeeze, nothing more than that. So you can see that at present, the company's trend is relatively weak, and there hasn't been any special performance this year. We'll just have to see what happens next. These two perspectives on it can change, but if there is still a chance, there's actually some upside potential. However, in all likelihood, there probably won't be much because, as we just mentioned, this part of the trend is actually just because it doesn't belong to the military-industrial camp, nor does it belong to the Google camp. Currently, its main partner is Amazon, and overall, its situation isn't as good as Broadcom's. Broadcom, for example, doesn't just work with Google, but also with many other companies, so the pressure going forward is still quite significant. The current rebound is mainly just on the surface. It hasn't really gone up much, so it's more of a rebound after a steep drop. And then, talking about Pure Storage, of course, this company mainly focuses on large-scale flash memory, and its market position is that, in the future, it aims to replace HDDs and become the company providing long-term storage for various end markets. Its main approach is software-defined storage, offering subscription-based services according to demand. So, in the future, you don't need to buy any physical hard drives. You just need to subscribe to storage space from Pure Storage, and that's it. You can also use a network platform for cloud management and handle everything in one place. That's the company's main business. Right now, the company actually faces many challenges, and moving toward a subscription model in the future is a trend. You can see that their gross margin is very high, but their net profit and earnings are quite low because at present, actually, they've invested a lot in R&D and innovation, and going forward, it's just that. This kind of thing needs to be put into practice. So right now, the financial report results highlight the company's current stage. Its gross margin and revenue are in line with expectations, but its net profit and earnings are below expectations. So as for this company, it still hasn't entered its growth phase yet, and that seems pretty clear. The key is to see when things will start to take off. But in the short term, the company's performance has actually been relatively weak. But this is also an opportunity to get in early. If you're a long-term investor, say with the horizon of 2 or 3 years or more, you could consider investing in this company because this company, well, it has taken its storage business out of the traditional cyclical framework. In other words, storage is no longer just a cyclical thing. It has turned storage into a subscription-based service. And with subscriptions, you actually get stable revenue, not just from selling products, but also from storage can also move beyond just selling hard drives. This gap actually presents some growth potential. Then you need to look at scaling up and bringing your costs down. As for this company, its current revenue is actually $3.635 billion, and it's expected to grow by about 4% this year, so the growth rate is relatively slow. Looking ahead to the next production year, its expense ratio is quite high because it still needs to keep investing to increase its market share. In the long term, they're projecting a pretty high gross margin, around 65% to 70%. For a storage company to achieve this kind of gross margin, it actually isn't just a storage company. It's more like a company that's software driven. If they can maintain this level, their valuation should have room to go up. However, at the moment, this is already priced in, so the stock will probably just move sideways for a while. As for the future, they mentioned that some of their current manufacturing center clients are very likely Meta. Right now, their gross margin is very high, up to 90%. More licensing for content and media might change things. If manufacturing clients partially purchase storage hardware and subscribe to software, gross margin will go down. Not necessarily bad. The company mentioned currently the 3 main areas are actually Currently, traditional virtualization solutions are quite expensive, so many companies are looking for alternatives. The second thing is this 2-foot solution, which is based on the network's ability to manage virtual workloads and virtual machines, and this is becoming more popular. In addition, there's also a growing trend of using Kubernetes-based AI to continue learning and increasing application deployment. So what is Kubernetes? It's a portable and scalable system. It's an open source platform on the internet, and you can have many different machines. It could be on the cloud, on premises, or a hybrid setup. This allows you to manage everything in one place and perform various operations and applications. So this is the current topic of discussion. A new trend in the network market is that everyone wants to manage their applications easily in one place and allocate resources efficiently. Since Pure Storage also has its own native cloud storage system, this can actually become a key part of the setup. The standard configuration for Ubernet is that I can store whatever I want on this platform because it matches the nature of the platform, aiming for a single platform that enables remote scheduling and real-time resource allocation. So in fact, this setup has a lot of potential. There's definitely room for further development and potential in the future. All right. So moving on to the next question, actually this season it was also adopted by a major enterprise software company. In addition, it was mentioned that among AI companies, the adoption of this Star Cloud vendor is quite noticeable. He also mentioned that the products sold to treatment centers are not necessarily targeted and not necessarily designed specifically for AI. Usually large companies wouldn't buy this kind of product either. What does this mean? Well, according to him, recently actually, he is a bit pained by this. Weston, Cheeto, and other details have all clearly increased, and this is mainly due to the strong demand from the main business line. In fact, after manufacturing centers purchase this storage solution, most of them actually go on to buy HDDs. This product is specifically designed for AI, and most companies will use it. As I mentioned earlier, it's used by companies working on Kubernetes, AI startups, or, as it seems now, by public cloud providers like Jinxinyan and Yingxinyan, because we know their use cases are actually related to AI, machine learning, and high-performance computing. So, at present, as for how to break through the traditional storage ecosystem going forward, it might have to start with these new cloud providers, because right now, these emerging clouds are just beginning to build out their data centers. If they grow to a larger scale and become relatively mature, they could then drive this forward. The key trend to watch going forward is the shift from traditional HDDs or SSDs to this kind of subscription-based and flash storage service. In fact, looking ahead, this company has already signed a contract with Meta. Previously, beyond Meta, they would sign contracts with other public companies, but that hasn't happened, so people will watch when news comes out. The company's stock price increased after signing with Meta, so if similar news emerges, we can expect another rise. How the company lowers costs to achieve scale and improve profitability is also important. Here, you can see the stock price chart for PSTG. You can tell that this spike happened right before the deal with Meta, so actually that was when it had its biggest surge. After that, it was mostly just some fluctuations. Now, it's basically moving along with the market. All right, next, let's take a look at the current pre-market strong and weak performers. At 9:30, the import price data was released. Looking at the latest import prices, overall, they're also below expectations. There hasn't been much change, so this shouldn't have a significant impact on the market. All right, among the stocks in the S&P 500 that are rising, we definitely need to mention a few. The main companies seeing gains are these ones. Microchip, then Coinbase. On my end, there's also, this one is a related company, Freeport-McMoran. And this company should be some pharmaceutical breakthroughs. OKR stock is also on the rise right now. Nvidia is also up. And then currently, you can see that above Tesla, actually, most companies in the pre-market this year are still in an upward trend. So looking at it again, actually, just now, you can see that. After the ADP data was released, the S&P 500 futures dropped, but now they've bounced back. So it seems that the situation, or rather the current interpretation by everyone, is positive. The market is interpreting it as an expectation of increased slack in the job market, which is a favorable interpretation for the stock market. Next, let's take a look at the decline. CND is still relatively weak at the moment. Let's see if it can start a second wave, and then course strike. Because of the earnings report, everyone feels that things are actually okay for now. As for Intel, it's probably because it had a big rally before, and I personally had a larger position in it before as well. Looking at its prospects, Intel is actually one of the main companies with market momentum. The US government is clearly supporting it, so there should be quite a few opportunities going forward. Right now, overall, most of the major tech stocks are up in pre-market trading. Since there will be another update at 11 o'clock and the volatility index is also in play, we'll have to see what the results are. Next, let's take a look at the overall market situation. You can see that quite a few small cap stocks have shown significant gains, so at the moment, market sentiment seems to have clearly improved. You can also see that these stock prices are all pretty low. As for the declines, don't pay too much attention to Pure Storage, which we just mentioned. There's an issue with not being able to look it up. And then there's a drop in Help. At the moment, the market atmosphere is actually pretty good because Aaron had some news today about his fundraising, and it's being done through equity allocation. A few days ago, didn't they mention CP investment? I haven't introduced that yet. Right now, the market is also up, so let's see how things go later today. The remaining economic data and the current welfare index, if it can stay around 53, that'll be fine. I don't expect any big surprises. And finally, we'll have to see if the US stock market can continue yesterday's rebound. That's all for today's market review. Good night, and thank you all for watching.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.